Morning, everybody. It's the 6th of April. We're Signal Centre talking ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning, mate. All right?
Yeah, you?
Yeah, very happy. Good weekend. Good weekend of football.
No, not going there.
Yeah, nice long weekend. Actually, the weather wasn't bad, was it?
That was all right. A bit miserable yesterday morning, but other than that, it was okay, I suppose,
Yeah.
which is good. We'll go on the markets this morning, looking pretty positive.
Yeah,
Um,
pretty good start.
let's just have a bit of a roundup on what's going on. So, obviously, US was open yesterday, despite it being a holiday in most of Europe. And we're playing a bit of catch up with Wall Street this morning. This was in reaction to a pretty solid non-farm payroll number on Friday. The survey number for services for the services sector that was ahead of expectations. The S&P closed at a record high, while also the tech-focused Nasdaq 100 outperformed, which was aided by Google getting a favourable court ruling on copyright infringement, and also a key delivery update from car maker Tesla. We'll come on to what that means from the technical perspective shortly. We've been obviously mentioning the sort of potential for a top pattern forming on the Nasdaq, and that may be coming close to being invalidated, but we'll come on to that in a minute. Elsewhere, we had Janet Yellen talking about making a case for harmonised corporate tax rate cuts across the world's major economies, which would help innovation, growth, and prosperity. So that would be giving markets a further boost today. On the corporate side of things, Credit Suisse is overhauling its executive ranks after the Zurich-based bank was hit hard on the collapse of the family office Archegos Capital Management. That's pretty much it on the news front that I've seen. Obviously, there's a bit going on with COVID in terms of what's going on in Europe and also in the UK. There was no update yesterday from Boris Johnson about foreign travel or overseas travel, which was disappointing, certainly for some of the travel stocks. But I think probably the right thing, if we all want to keep the numbers down. So we'll wait and see how that develops over the coming weeks, I guess.
Yeah.
Anything you've seen on the news front, Steve, before we crack on with the charts?
Indian state refiners will buy 36% less oil from Saudi Arabia in May than normal. Three sources have said, in a sign of escalating tensions with Riyadh, even after the kingdom supported the idea of boosting output from OPEC and allied producers last week. Okay. So energy relations between India and Saudi Arabia a bit tenuous at the moment.
So I saw there was a big gold dip in oil yesterday. Maybe that's a decent place to start on the charts, Steve.
Yeah,
just to have a look at what's going on there.
Yeah, I mean the one chart, sort of like wanted to highlight, was FTSE. We'll jump onto that in a sec. This is the 4-hour chart on oil, and you can see this bearish channel after we've sort of hit the high on the 8th of March, so almost a month ago now. We've had this negative channel coming in, broke the upward supporting trend line, and almost looks like a bit of a flag pattern. So I'm not massively concerned about this. I still think there's more on the upside from oil. On the daily chart, though, as Joe said, a bearish outside day yesterday. So on the defensive at the moment, but we've got decent support just below the WTI crude oil coming in at 57.16. That's a couple of dollars lower. On the gold side of things, that's perked up a little bit over the last few days, and that's trading around 17.30. We've got the resistance coming in at 17.55, and obviously the support and potential base for a double bottom formation coming in at 16.77. So a break of that 17.55 should lead to a nice rebound higher. Again, still sort of like jury's out on that. The dollar index has taken a little bit of a hit over the last few days, as you can see here, after a bit of indecision on the 31st of March. April has been the fall in April, apparently. On the indices side of things, the one I was really wanted to highlight was this I'll show it on the short-term chart first, but it's a level we've been talking about for quite a while now. It's around about the 6,800, 6,812 level. And we've had this triangle formation forming for a while, and we're just broken to the upside this morning. So we've had a sort of like a decent rally higher. 57 is the low today, 68.41. I mean, that's a normal daily range in the FTSE. We've already had it within a couple of hours this morning. So good potential, looks quite promising. If we close and hold above the 6,800 level, that'll be positive for the rest of the week, and I expect further upside there. DAX has done the same, really. We've got off to a sort of like, well, it was a flyer on yesterday, after sort of like Friday's non-farm, but we've had a little bit of a pullback this morning in the DAX, but I think it'll be quite short-lived. Let's get an hourly chart up there. Don't know why it's showing a daily. As you can see, we sort of like had a bit of two-way action this morning in the DAX. So, but we got this Ichimoku cloud support coming in. Bullish hammer being posted at the moment, so that the dip lower has been rejected in the last hour, and we're looking for higher levels again in here. Again, similar sort of thing in CAC. Potential for a bit of a flag formation forming. The Dow all-time highs on yesterday, 33,620. And although we've had a bit of a sort of sell-off overnight, looks like we're coming back with a vengeance. Joe was talking about the reversal formation we were looking at in NASDAQ, and this head and shoulders formation. However, we've broken above the recent resistance at 13,300, and we're 600 points. Oh, sorry, the all-time high is 600 points away. We're halfway there. 13,635 the high today. So yeah, looking pretty positive, although it's subdued in this sort of like couple of hours. We've had we had a sort of like an attempt last night to sort of spike higher, coming back, retesting support, and looking to go again. So pretty positive on the index front. Only other sort of like thing really to look at would be yields. They're sort of like not doing an awful lot this morning. So yeah, I mean, the Bund under a bit of pressure, so yields sort of like looking to move a little bit higher again still. So nice little move there. Yeah, so that's about it.
Okay, thanks, Steve. It all does feel a little bit flat this morning, I suppose. Whether or not there will be any change throughout the week, I don't know. There's not much in terms of economic data out today, only Eurozone unemployment at 10 o'clock. So, yeah, I haven't seen what's out during the week, but we'll have a look at that shortly. But just over to, I guess, dollar index to start with, or as a starting point, or in fact, just look at these baskets of currency indices. As you can see, sort of down the bottom here, we've seen a cluster of currency indices moving higher over the last couple of days, and typically what you'll see is the dollar index dipping when that happens. So there's been a bit of a move back to sort of riskier assets, I suppose, and a bit of a cooling off in the dollar index. If we take a look at the dollar index on a standalone basis, then short term, it still looks quite bullish, I think, following the breakout of this wedge, and it continues higher. We broke out above this resistance here on the 9th of March at 92.50, and today we are retesting that level. So I guess this is sort of the first, one of the key tests it faces. If the buyers do come back in around here, then I think we can see a continuation higher to 94.00 and then 94.50. But we'll have to wait and see what happens today, and if the buyers are willing or not. I guess we'll find out later on today what it wants to do. If we take a look at euro USD, then the correction lower towards the 38.2% Fibonacci level has played out quite nicely. We've seen some support coming at 116.95, and over the last few sessions or so, we have seen a little bit of a push higher, a decent bit of volume spike there on the 1st of April, accompanying a move higher off of this support zone. So waiting to see how much of a correction higher that will be, and whether or not that will just be temporary before a continuation of this short-term trend. In terms of support zone, still looking for price action to find support in this kind of region. It's found support just in front of the 38.2, but we'll wait and see what happens with that over the coming days or so. Elsewhere, anything else that's particularly standing out? I'm still quite interested in this. From the perspective of it forming a top. So this is the daily chart on Aussie yen. We've seen a decent bullish trend channel that's been in place since October, November last year. We saw a breakdown here and arguably seen a bit of a retest. Now over the last few days or so, as you can see, these candles are becoming quite indecisive. Not really making progress either way. Potentially forming this head and shoulders top. If we go this as the left shoulder, that is the neckline, that is the head, that is the right shoulder, and that's what we're forming now. So I think that we are forming a top here. Maybe a little bit too premature to call it that, but that's one market that I'm particularly interested in at the moment. If we look at Aussie dollar, obviously, we're seeing a bit of dollar weakness today, and we've seen a little bit of buying interest come back in. I don't know if this is a bit of sort of month-end positioning, maybe, because we've seen quite decent volume spikes on a lot of currency pairs. But I think there's a head and shoulders top pattern forming here, and maybe we're into a retest here of this neckline before further selling is seen to the downside. But certainly, given what we've seen here on the candles, probably a bit more chop in the coming days, which will make it difficult to trade. Let's have a look what else we've got. Cable, what's that doing? So cable, we saw a break of channel, and we're seeing a retest of this channel at the moment, but we also potentially formed a bit of a wedge, which would suggest a continuation higher. So I'm a bit in two minds with this at the moment. If we can get back above this resistance of the underside of the channel, then I fancy it to continue higher, breaking out from this wedge. But it's I think, more choppy price action expected there as well. New Zealand dollar, the New Zealand dollar in general seems to be suffering a little bit. This might be another case of a break of trend and looking to test on the underside before a continuation lower. Similar situation with the New Zealand dollar versus the US dollar. Top pattern formed here. We saw a decent breakdown on the 23rd of March, rallying up for a bit of a retest maybe before a continuation lower. This is the ultimate target we've got down here at 67.00. So that's quite interesting. If we look at what the dollar's doing against some of the other pairs, we've got this wedge still on dollar CAD, and prices contained within this. It's all becoming very narrow, so we could see a break in either direction. Obviously, a break lower, and we, seeing quite a bit of fresh air down here to target. But if we see a break up, then that would obviously support dollar strength, and we could see a reasonable correction up to this 38.2% level as a starting point in the short term. Dollar Swiss, that's had a very nice move higher, but stalling a little bit here. We posted a shooting star candle on the 1st of April in line with a decent volume spike. But as I said, we've seen that volume spike on all the markets, really. So whether that's just a bit of month end or month beginning positioning, I'm not sure. Bit of a pullback in that today. If this is to be a bit of a bottom pattern or a cup and handle, or handle and cup sort of formation, then maybe we'll see some buying re-emerge back here around about 93.00. That's pretty much it from me on the currency front.
Nice.
Okay, so onto the news. As we mentioned, it's only Eurozone unemployment today, which is due out at 10 a.m, expected to rise to 8.2. Nothing else I've seen on the calendar, all looking relatively quiet. Anything you've got to add, Steve, on that?
No, that's pretty much what we got. Nothing really on the calendar, like you say, not a lot. So a bit of a sort of like snooze at the start of the week, I think.
Yeah, it does feel
I'm
like
sure
that.
we'll get some sort of excitement.
Yes, indeed. So going to the head from Thursday now. Obviously, we was off Friday and Monday for the bank holiday. Nothing to speak of there. So short stops out on shorts on Aussie CAD and Aussie dollar. I think looking at the daily charts, it still looks pretty bearish, but as mentioned, we're getting a bit of choppy price action, so that didn't help us out, unfortunately, on Thursday. And obviously, there's a bit of red on the screen there, so we need to try and correct that if we can. Hopefully, we get a bit of follow through, but it's not looking that hopeful given that we don't have much going on today. So, Steve, in the time I've been speaking, did you manage to find anything you fancied today?
No, as you say, there's not really a lot out there that. The one thing I did want to highlight was this sort of like this correction higher in copper. It's had a bit of a, you can see on the 4-hour chart, little bit of a pickup from the $4 level, quite an accelerated move last night and into this morning. It's looking quite decent really on that side of things. No, I'm sort of thinking what's the dollar going to do next, because that'll sort of like really give us a clue on where to go now. I think the indices feel like, yeah, let's go with indices, shall we? Let's stick it on the FTSE. Excuse me. This 68.10 level for me is a sort of decent level to be sort of basing. We've been trying to break it for weeks and weeks and weeks, and we broke it this morning. So maybe we've had a bit of a pullback towards the 8 o'clock European Open, and maybe now we'll get the extension higher. So I'm getting long here at 68.14.8. Stop will be at 67.84.8. Quite nice tight stop, and let's look for 69.34.8 on the upside. So a 4-to-1 risk reward on the FTSE. That takes us just to up in front of the yearly high.
Lovely. Okay, I'm going to take a look at Aussie yen. As I mentioned when I was going through my roundup, it's one of the markets that I fancy at the moment, just liking the daily setup that we have here. So we've got the break of channel, and we've seen a retest of the underside. In the recent days, we've seen a lot of indecisive price action, although it is grinding higher. The candles are quite indecisive, lots of dojis in that. If we are forming a right shoulder, then I think it's got to start working out pretty soon. Around about sort of 61.8 to 78.6 is a sort of sweet spot for a right shoulder if it is going to form. So we're just above that or just below it at the moment. We have spiked above the 61.8 and forming a bit of a doji again today. So on the intraday basis, I'm going to sell that. This is the hourly chart. We're currently trading 84.20 or 84.19, and I'm going to have a stop loss just above the highs that we've posted in the early hours of this morning at 84.51, and I'm going to target a move down to this swing low here from the 1st of April at 83.44. So just looking for 2.5 hours on that. I do fancy lower prices, but obviously we've only got until 9 o'clock tonight to get an outcome on this, so I'm going to look for something hopefully semi-realistic and see if we can get a winner out of that today.
Nice one, mate. Good luck with that.
Yes, okay, so I think that's pretty much it for us today. A quiet start to the week following the bank holiday weekend. Let's wrap it up there, Stephen. We'll be back tomorrow morning.
Yeah, lovely. All right, mate.
Have a
Cheers.
good one all. Bye-bye.